Good morning, everyone. This is a little bit of a tough follow. I'm not used to following someone as distinguished as Senator Scott, and asking a math nerd to follow a professional orator is a bit of a tough one, but I'll see what I can't do here. Opportunity zones are obviously very exciting, and we're honored and privileged to be here to kind of share a debt capital provider's perspective onto opportunity zones. Lima One Capital, hopefully most of you know, certainly those of you that are from Greenville or South Carolina, Lima One is located right here, excuse me, in Greenville. We have about 150 employees. We are a direct lender for investment real estate, and we're going to do about, give or take, $1 billion worth of loan originations this year. Let me see, next. So real estate is really one of the key targets for opportunity zone investments. They do have some particulars. There are many very, very knowledgeable and really tip of the spear thought leaders in the legal field and the accounting field that are here today, and they have a much deeper understanding than I do about these particulars. So I would encourage you to chat with them if you have some detailed questions. I'm certainly available as well. But there are a few basic tests, one of which is the substantial improvement threshold. You've got to double the basis in the building. Within 30 months, there's a 30-month safe harbor, and it excludes land value. You do have to satisfy the original use test, which is either an adaptive reuse or redevelopment of the real property, or if a building has been vacant for 5 years, then you can continue to use it as a warehouse or whatever the case may be that it was prior to that. And in the most recent letter from the Treasury, they confirmed that owning and operating rental real estate, irrespective of whether it's core 4 or single-family home or apartment building or whatever, does indeed constitute active trade or business. So John and the Economic Innovation Group provide a tremendous amount of resources and data and perspective on opportunity zones, and I think it's, when he spoke about community, I really think that kind of summed up a large part of the gap here. And I actually pulled this data from the Economic Innovation Group's website that talks about the delta of residential real estate and opportunity zones versus outside of opportunity zones. Nationally, and think about it, Senator Scott was talking about the 3.5% unemployment rate. We've got, while the crash was horrible, the tremendous bull market on the backside. Asset values are through pre-recession levels, but still in opportunity zones you've got a 13% vacancy versus an 8% vacancy nationally. The home stock, the median age is 50 plus years old in opportunity zones. A striking number, or the last two bullet points, which is the median home value in an opportunity zone is $156,000 versus $246,000 nationwide, and even more poignantly, in almost half of the opportunity zones, the median home value is less than $100,000. So, depending on which statistic you look at, you're looking at a lower home value of somewhere between 35 and perhaps more than 50%. So, clearly, some reinvigoration is needed, and that speaks directly to the community. And this is exactly the kind of capital that Lima One Capital provides. Here, this is an example of a scrape and a rebuild. As you can see, a tremendous improvement. In a more modest example, but also without a doubt, more frequent example is a rehab of a property that is shown in these two pictures here. So I hope in summary that you can see that whether it's warehouses, office buildings, office space, incubators, all of those places need employees that live in the community, that live close by, that have safe, clean, reasonably priced places to live. And the impact on the community is tremendous, as you can see by those couple of examples. And we are, as a firm, committed to providing financing, for investment real estate. So, thank you very much.